Everyone is watching the same AI giants and headline energy stocks. But while the crowd is distracted, a sub-$1 US company is quietly operating inside government and defense-related environments that most retail investors never look at. This isn't hype, and it's not a prediction. It's about understanding what's actually happening beneath the surface and why this stock keeps showing up in places the market tends to ignore. The company is Ocean Power Technologies, often overlooked because it doesn't fit neatly into one box. It's not just an energy story, it's not just defense, and it's not just technology. It sits at the intersection of all three, solving a very specific problem: how to operate, monitor, and collect data in ocean environments without putting people at risk. To understand why this matters, you first have to understand the product. Ocean Power Technologies builds autonomous and remotely operated maritime platforms, most notably its unmanned surface vehicles known as VOMV platforms. These are rugged, modular systems designed to operate in harsh ocean conditions while carrying sensors, communications, equipment, and mission-specific payloads. In simple terms, they're robotic boats that can be sent into environments where sending crews would be expensive, dangerous, or impractical. This is why governments care. Modern defense and security operations rely heavily on persistent monitoring, surveillance, and data collection. That includes coastal monitoring, maritime domain awareness, subsea inspection, and support for autonomous operations. Platforms like these allow agencies to gather information continuously, reduce human exposure, and operate at lower long-term cost. That's not a futuristic idea. It's a present-day operational need. What makes Ocean Power Technologies interesting isn't speculation about what they might do one day. It's that they've already been shipping systems and announcing orders tied to government, allied, and commercial customers. Over the past year, the company has reported multiple contracts and deliveries, including international customers and defense-adjacent applications. These aren't viral headlines, but they're the kind of quiet developments that signal real-world validation. Now, here's where the market disconnect comes in. Despite these developments, the stock continues to trade at penny stock levels. Part of that is because revenue is still early and uneven. Part of it is because small companies tied to government contracts often move slowly and don't produce flashy quarterly numbers. And part of it is because many investors simply don't understand how long government adoption cycles work. This is where investor proof starts to matter, not as a sales pitch, but as confirmation. In recent filings and company updates, Ocean Power Technologies has disclosed a growing backlog and a significantly expanded pipeline of potential opportunities. Backlog represents work that's already been awarded, but not yet fully recognized as revenue. Pipeline represents identified opportunities that are still in discussion or proposal stages. When both of those numbers grow at the same time, it tells you something important. Interest in the product is expanding, even if revenue hasn't fully caught up yet. Another signal that long-term investors tend to watch closely is insider activity. Public filings have shown recent insider share purchases, meaning executives chose to buy shares with their own money at prices close to where the stock trades today. Insider buying doesn't guarantee future performance, but it does align leadership incentives with shareholders and often signals confidence in the company's direction. And this is where it gets important for retail investors. Stocks like this don't move when everyone is watching. They move when the underlying signals quietly line up. In the next few minutes, what matters most is understanding which developments would confirm this story and which ones would break it, so you can decide whether this belongs on a serious watch list or not. Before going further, a quick reminder: this content is for educational purposes only. It's not financial advice or a recommendation to buy or sell any security. Small cap and penny stocks are volatile and risky, and everyone should do their own research and consider their risk tolerance before making any decisions. Back to the business itself. One of the reasons Ocean Power Technologies remains underfollowed is that its story doesn't fit cleanly into popular market narratives. It's not a pure AI software play. It's not a traditional defense prime contractor, and it's not a simple renewable energy stock. Instead, it provides enabling platforms, the physical infrastructure that allows data, sensors, and autonomous systems to function in ocean environments. That positioning can actually be an advantage. Governments and industrial customers don't buy these systems for hype. They buy them because they solve operational problems. When a platform is adopted, switching costs can be high, and relationships can last for years. That's why even relatively small initial contracts can matter if they lead to repeat orders, expansions, or long-term service agreements. At the same time, it's critical to be realistic about the risks. This is still a small company. It still operates at a loss. It still depends on successfully executing contracts, managing cash burn, and converting pipeline opportunities into actual revenue. Delays, cost overruns, or canceled projects could pressure the stock quickly. That's why this type of name belongs on a watch list, not in a hype narrative. From a market behavior perspective, stocks like this tend to move in phases. Long periods of quiet trading are followed by sharp reactions when new contracts, deliveries, or strategic updates are confirmed. Investors who understand the business ahead of time aren't scrambling to interpret the news when those moments arrive. Right now, the price reflects skepticism and impatience more than a full understanding of the business. That doesn't mean the market is wrong. It means the story is incomplete. The key things to watch going forward are straightforward: confirmation of deliveries, updates to backlog and pipeline figures, and any announcements that show deeper integration with government or defense-related customers. So the takeaway here isn't that ocean-powered technologies is guaranteed to succeed. The takeaway is that it operates in a niche. Most investors don't bother to understand where real adoption, real contracts, and real operational progress matter more than headlines. Stocks like this tend to be ignored for a long time and then repriced quickly once the story becomes obvious. Whether this ever becomes a major winner or not, understanding why it keeps appearing in government and defense-related environments puts you ahead of the crowd. And that's where smart investing actually starts. As always, this video is for educational purposes only, not financial advice. Do your own research, manage risk carefully, and I'll see you in the next breakdown.